that's a lot of money for a startup. You know, what do you think justifies this kind of cash?
Well, the investment really matches the size of the ambition and the opportunity. There's over $200 billion that happens in restaurant takeout sales every year, and only 5% of it is online today. 95% of the time, a customer is still placing an order through a phone call or walking inside the store. And our goal at DoorDash is to not only serve those customers, but also go beyond restaurants and build a last-mile logistics platform in every city.
So how do you plan to spend it? Where will you invest this money?
You'll see us invested in three primary areas. The first is really building on the amount of selection and restaurants that we offer. We offer delivery from 90% of the top 100 restaurants who offer delivery today. We plan on building there. Second, we want to grow the number of cities that we're in today. Today we're in 600 cities. You'll see us be in serving over 1,600 cities by the end of the year. And finally, we'll be doubling down on the DoorDash Drive platform, which allows any merchant to offer delivery directly through their own website.
Can you talk to me about your regional sort of distribution? I mean, what areas are you more popular? I mean, is it urban areas? Is it the middle of the country? Where are people using it?
So DoorDash started in the Bay Area, but since we've grown tremendously to over 600 cities covering 50 metros, and we found a model to work in all sorts of cities of all shapes, geographies, smaller cities, larger cities. The truth of the matter is every customer in any zip code eats 20 times a week, and we want to serve them all.
So the landscape is very competitive, and there's like a graveyard of companies that didn't make it in this space. And I'm curious what sets your business model apart from Postmates or Uber Eats, and why you think this can be a long-term sustainable business.
From the beginning, we've always had a merchant-first approach. We've always worked on serving the restaurants and integrating into their system so we can be as efficient as possible. As a result, we were able to prove out that model. So in the past year, the company became contribution margin positive, which means that we got our earliest markets profitable, our newer markets are achieving profitability even faster. And it was only when we figured out how to operationalize the model did we go out and raise this amount of money.
So how do you differ from Postmates? How do you differ from Uber Eats?
We work very closely with the restaurants that we serve, and the differentiation really comes when you look at the amount of selection of restaurants that we offer. We deliver from over 100,000 stores across the US and Canada, and we deliver from more of the top 100 restaurant brands than all of our peers combined.
And what's interesting about DoorDash is you also enable restaurants to deliver food directly to you without ever knowing that DoorDash was involved, right?
Absolutely. So through the DoorDash Drive platform, restaurants can offer delivery through their own website, their own phone system, or their own app, and a dasher from the DoorDash platform will fulfill that order.
Now, there were reports that the negotiations with SoftBank took a long time. You know, in the past, I know we've covered some of your fundraising struggles. You know, what were the sort of sticking points to get here?
Well, there were a lot of parties involved. We raised money from SoftBank, Sequoia, and GIC. And when you're talking about this size investment, you have to take a very responsible approach in having a set of conversations to make sure there's a need, to raise that amount of money. And it was only in those dynamic conversations after all of us agreed on a shared vision on how to pursue the massive opportunity in front of us.
Our Caroline Hyde caught up with Rajiv Misra, the CEO of the Vision Fund, in Barcelona earlier this week and asked about just how SoftBank having this much money is impacting the investment landscape, impacting the startup ecosystem from a big picture. Take a listen to what he had to say.
It'll be good for them if the valuations go up because they can exit at those prices. And a lot of the early investors have exited, predominantly have exited with our investment because we do both primary and secondary, buy out secondary shares, including in Uber, in Didi, in WeWorks, where early investors exited and sold secondary shares to the Vision Fund.
There's been a question of whether SoftBank having this much money to plow into the startup ecosystem is actually good for companies and good for other investors. What do you think?
I think it really depends on the ambitions of the company. If you're trying to build a multi-generational company like DoorDash and you want to become the last mile logistics layer in every city, it's going to take a really long time. And as a part of that process, you invite different types of investors at different phases of a company's life. And we're very, very happy with the 3 investors that participated in our last round.
I mean, this kind of money is catalytic for a company of your size, and I'm curious what you feel now is your responsibility to, no pun intended, deliver, and make sure that this really does get you to the next phase.
We have a lot of work in front of us, absolutely. We plan, of course, on spending it with the same discipline that we've always had. And again, it's better serving the customers on the DoorDash platform. We have to triple the geography. We will be adding more products to accelerate the roadmap and better serving the merchants, the consumers, and the Dashers at DoorDash.
So where will DoorDash be in 2 years?
In 2 years, DoorDash will be in every city in North America. And you will see us deliver both restaurant orders as well as beyond restaurants.